Have you ever stopped to think about how companies borrow like billions of dollars through bonds? It's this huge, complex thing. And traditionally, it's been incredibly slow, very relationship heavy, lots of manual work. Just imagine a process taking weeks, super prone to errors, and potentially costing companies millions because the timing or price wasn't quite right. Today, we're doing a deep dive into some really fascinating insights. We're looking at how artificial intelligence is shaking things up, based partly on an article called AI Revolutionizes Bond Issuance and Financial Careers. Our mission, really, is to unpack how AI isn't just making things faster, but it's fundamentally reshaping this whole corner of finance, and importantly, what that means for the people working in it. So, okay, let's get into it. In the past, issuing corporate bonds was, well, a very hands-on affair, wasn't it? Companies, the issuers, they'd work closely with investment banks, the underwriters, and together they'd figure out, when to issue, set the price, market the bonds, decide who gets to buy them. A lot of negotiation.
Yeah. And what's really striking is how much of that relied on human judgment and often on static snapshots of the market, not continuous monitoring. Analysts would interpret the data they had. There were long talks back and forth. And honestly, it often led to suboptimal pricing. The bond could end up being too cheap, costing the issuer potential savings, or too expensive, maybe hurting demand. Plus, you had delays, higher transaction costs. It was definitely ripe for some innovation.
Okay, so that's the old way. Now, here's where it gets really interesting, right? There's this Canadian fintech, Overbond, and they've built an AI platform that takes this whole process that used to take days or weeks and compresses it down to hours or even minutes. That seems like a massive leap.
It really is. It connects to this bigger trend, digitizing and automating these traditional workflows. They're using pretty advanced stuff, deep neural networks, lots of integrated market data, electronic order routing. It's essentially trying to turn the art of bond issuance into more of a precise science.
Okay, let's break that down. How does this AI actually do that step by step? It starts with just gathering data, I assume.
Exactly. The first step is what you could call maybe market data aggregation or intelligent data synthesis. Overbond is constantly pulling in real-time data, structured stuff, unstructured stuff, from bond markets, credit, equities, macroeconomic indicators, news feeds, even social media sentiment. It creates this enormous live data lake, something way beyond what any human team could track manually.
Okay, so it has all this data. Then what? How does it decide on the price?
Right. Then comes the AI-powered price prediction, or precision optimization, you could say. Their neural networks chew through all that live data. They look at comparable bonds already trading, what's happening in the secondary market, signs of investor demand, macro risks, and they predict the optimal price and yield for the specific bond being issued. It spits out recommendations for the spread over benchmark rates, that's the extra bit investors want the coupon rate, even projections for the pricing curve. And because it's running continuously, this is key, the AI can spot these really narrow windows, maybe just a few hours long, when the market conditions are perfect, appetite is high, and borrowing costs are at their lowest.
Wow. So it's not just pricing, it's timing optimization down to the hour. That's completely different from the old way of like picking a launch day weeks in advance.
Exactly. Which leads to the next piece, timing optimization and automated execution. Instead of underwriters making educated guesses based on forecasts, the AI uses probabilistic models. It predicts demand elasticity, how demand might change with price, and keeps an eye on real-time market volatility. It literally alerts the issuer. Okay, the optimal window looks like it's opening up now.
Okay, so the issuer gets the alert, they approve the deal. Then what? Does the AI handle the selling too?
Pretty much. It moves to order routing and allocation automation. The AI electronically matches the issuer's goals with the investor demand it's seeing. It sends out the orders to dealer networks, electronic platforms like MarketAxess or TradeWeb, sometimes even direct connections to big investors. And the allocation part is smart too. The algorithms are designed to prioritize investors who are likely to hold the bond long-term, provide stability. It helps diversify the investor base geographically, and it tries to avoid flippers, people who just buy to sell immediately for a quick profit. Flippers can destabilize a new issue.
Okay, that's incredibly efficient. And I think you mentioned it keeps learning. It doesn't just stop once the bond is issued.
That's right. The last stage is post-issuance analytics and continuous learning. After the bond starts trading in the secondary market, the AI watches how it performs. Is the spread tightening or widening? Who's holding it? Who's selling? All that performance data gets fed back into the model. So the system gets smarter and better at predicting pricing and demand for the next time the company issues bonds.
So the core techniques are things like deep neural networks, natural language processing for the sentiment stuff, reinforcement learning for timing.
Yeah.
Sounds complex.
It is complex under the hood, yeah. Predictive analytics for demand. It's a whole suite of AI tools working together.
Okay, so let's get to the so what. If you're a company treasurer listening to this, what does it actually mean for you? What are the concrete benefits?
Right, the tangible benefits. The sources point to some really profound impacts. First off, and probably most importantly, lower cost of capital.
Right.
By hitting those optimal pricing and timing windows that the AI finds, issuers can genuinely reduce their interest costs. There was an example like a company issuing a $500 million 10-year bond. The AI recommendation could save them something like $7.5 million in interest over the life of the bond, just from achieving a slightly tighter spread. That's
Yeah.
significant.
$7.5 million on one deal. Wow. Okay.
Yeah.
What else besides cost?
Speed. Definitely speed. The whole thing just accelerates massively. You're going from potentially weeks of work down to same-day execution. Maybe say from 10 days down to under 24 hours. That agility lets companies grab market opportunities they might otherwise miss.
And you mentioned transparency earlier.
Yes, transparency is another big one. Pricing. Who gets allocated bonds? It all becomes much more data-driven and auditable. Less of the opaque, we think this is the right price from the banks. And finally, broader access. Automation makes it easier for even smaller, maybe less frequent issuers to connect with a wider range of investors globally. It levels the playing field a bit.
Those benefits sound really compelling. Cost, speed, transparency, access. But thinking about that human judgment aspect, is there a risk? Do companies lose something by relying so much on the algorithm, like that feel for the market?
That's a really good question, and it comes up a lot. The way the sources frame it, it's less about losing intuition and more about augmenting it. The AI handles the heavy lifting on data analysis, finding those optimal windows,
Yeah.
which actually frees up the humans, the treasurers, the bankers, to focus on the things AI can't do well: strategic decisions, building deep relationships with key investors, navigating tricky regulations, telling the story behind the deal. That human touch is still crucial.
So it's shifting the human role away from the number crunching and execution grind.
Exactly. The role is evolving, not disappearing entirely for everyone.
Okay, so it sounds incredibly efficient for businesses, but let's talk about the people. What does this mean for those who've built careers in traditional bond issuance? Are jobs just vanishing?
Well, not necessarily vanishing across the board, but definitely a significant role redefinition. Think about it. Traditional roles revolved around manual data work, judgment calls based on experience, and those critical personal relationships for execution. Platforms like Overbond are automating a lot of that execution work, previously done by, say, syndicate bankers or issuance analysts.
Right, so like manually watching market screens is replaced by real-time AI feeds. Guessing the optimal price becomes a neural network prediction. Calling up investors becomes electronic book building.
Precisely. Which means, realistically, that junior and mid-level execution roles, the ones heavily focused on spreadsheets, manual coordination, those are most at risk of being displaced or needing to change significantly.
But others might thrive.
Yes. Corporate treasurers, senior debt capital markets bankers, the relationship managers,
Yeah.
people who can take the AI's output, interpret it, question it, and use it for higher-level strategic decisions.
Yeah.
Their value actually increases. They're leveraging the tech, not being replaced by it.
And it sounds like this shift is actually creating totally new kinds of jobs, these hybrid finance tech roles.
Absolutely. We're seeing some really interesting new roles emerge. For instance, the capital markets data scientists. Think of them as the AI whisperers for the bond market. They ensure the AI gets the right data. They fine-tune the models, check the predictions are making sense, run simulations. They're crucial for keeping the AI effective.
Okay, so they manage the AI itself. What else?
Then you have the digital syndicate specialist. This person manages the bond sale process in this new AI-driven environment. They're using the electronic platforms, monitoring the real-time demand data coming in, maybe working with the AI to tweak pricing or allocation on the fly. They're the bridge between the tech and the market reality.
Kind of like an air traffic controller for bond deals.
Maybe. Yeah, something like that. Then there's a bond market product manager. These folks are responsible for the AI platform itself, making sure it meets the needs of the issuers, the bankers, the investors. They talk to users, work with the tech teams, decide where the platform needs to go next.
And you need people to connect all these systems, right?
Definitely. That's the API integration specialist. APIs are the connections between different software systems. These specialists are like the digital plumbers, making sure data flows instantly and securely between the issuer systems, the AI platform, trading venues like MarketAxess, TradeWeb. If those connections break, the automation grinds to a halt.
So it sounds like the likely future is this hybrid model. AI does the grunt work, the continuous analysis, the routing. Humans handle strategy, relationships, oversight. You mentioned it's similar to what happened in stock trading over the last couple of decades.
It's a really strong parallel, yeah. Manual floor traders mostly vanished, right? But they were replaced by quants, algo traders, electronic trading specialists. The nature of the jobs changed dramatically, but the need for smart people didn't go away. It shifted.
Okay, that makes sense. Now, you sometimes hear these big statements. I think JP Morgan mentioned something like 80% of credit issuance being done by AI. That sounds huge. Does that mean humans are only involved 20% of the time? What does that 80% really mean?
Yeah, that 80% figure definitely catches your attention. It's important to understand the context.
Yeah.
When they talk about credit issuance, it's broad, it includes corporate loans as well as bond issuance, which we're focusing on. And the 80% done by AI generally refers to the automation of execution and decision support tasks within that process. So for bond issuance specifically, AI is increasingly handling things like the initial credit risk assessment, helping determine the price and spread, targeting potential investors, optimizing the timing, a lot of the analytical heavy lifting.
But not the final sign-off.
Exactly. Humans are still absolutely in the loop for the final approvals, for managing complex negotiations with strategic investors, for handling the crucial regulatory and reputational aspects. So that 80% doesn't mean 80% of people are gone. It means 80% of certain tasks are becoming AI-powered, allowing bankers to shift their focus to oversight, strategy, and complex relationship management.
Got it. Okay, so thinking about career paths, what about someone like a capital markets business analyst? Does this AI shift create opportunities for them to move into these primary issuance roles? Because historically, that felt like a tough move, kind of a closed shop.
Yes, absolutely. And arguably, it might be easier now for a BA to make that move than it was, say, 10 years ago.
Yeah.
You're right, primary issuance used to heavily value years of specific deal execution experience, that sort of tribal knowledge you only got on the desk. BAs are often seen more as support or tech liaisons. But now, with AI platforms taking over a lot of the deep technical modeling and the mechanics of book building, the required skill set is changing. Teams increasingly need people who understand systems, who can interpret data outputs from AI, who can manage automated workflows, who can effectively bridge the gap between the finance side and the tech vendors. And those skills, that's often the sweet spot for a good capital markets BA.
So a BA wouldn't necessarily need to know every single pricing convention from day one. They could leverage the AI.
Precisely. They'd work with the AI-generated models and insights. Their value comes from understanding the process, configuring the systems correctly, helping onboard issuers onto the platform, ensuring data integrity, managing the workflow, ensuring compliance. It really does create more realistic entry points.
Can you give an example?
Sure. A BA who's really good at mapping out system workflows might be a natural fit for that digital syndicate specialist role we talked about. Or a BA with strong data analysis skills could move into a capital markets data analyst role, supporting the AI-driven pricing and investor targeting functions.
What skills should a BA focus on if they want to make that move?
Definitely needs solid bond market fundamentals. You don't need to be a trader, but understand the basics. AI and machine learning literacy is key. Not necessarily coding the algorithms, but understanding what they do, their outputs, limitations. Familiarity with the main electronic trading platforms is helpful, and of course, a good grasp of the regulatory environment.
Okay, so the bottom line here seems to be that AI, perhaps counterintuitively, is breaking down some of those old barriers. It's making primary issuance less of a closed club.
I think that's fair to say. For a tech-savvy BA who understands financial markets, this is probably the best opportunity in decades to step into these kinds of roles, because that fluency in technology and process is becoming just as valuable, maybe even more so in some cases, than the traditional desk experience alone.
So recapping our deep dive today, we've really seen how AI is grabbing hold of a process bond issuance that was often slow, very manual, relationship-based, and transforming it into something incredibly fast, data-driven, efficient, and more transparent.
Yeah, and what's really fascinating, I think, isn't just the tech itself. It's how it forces an evolution in human expertise. We're moving away from purely manual execution
Yeah.
towards needing skills and strategic oversight, critical interpretation of AI outputs, and focusing on those high-value human interactions and relationships.
It really makes you wonder, doesn't it, what other areas of finance areas we think of as relying heavily on human judgment today? What other areas are maybe on the verge of a similar AI-driven revolution? And how might, your own skills need to adapt to thrive in that kind of future?
It's a constant learning process, isn't it? Understanding these shifts helps everyone navigate what's coming and figure out how to use this knowledge effectively.
Well, that was our deep dive into the intersection of AI and bond issuance. We really hope you walked away with some valuable insights and maybe a few things to chew on.